The finance industry has been testing, analyzing, and iterating on digital assets for some years now. The advent and ongoing evolution of blockchain technology and various cryptocurrencies have been instrumental in legitimizing and securing the future of this asset class, but some lingering problems have made their full value hard to determine, and thus hard to leverage. As digital assets have expanded, the ecosystem in which they can be optimally leveraged has grown in kind, and at least digital assets are able to be properly valued and utilized. The application and development of digital assets has been a major part of entrepreneur Henry Chen's 15-year-long career. His experience across investment banking, private capital management, and digital asset markets has been invaluable as he pursues the institutionalization of crypto economy, tokenization, on-chain financial infrastructure, and the mass adoption of blockchain technology. He's at the cutting edge of the industry, an active participant and observer in digital asset value creation, and the new developments in that industry are not another turning of the hype cycle, they're measurable, actionable, and real. Over the next 5 years, I expect to see digital finance move from the periphery to the core of global capital markets, driven by tokenization, programmable assets, and more mature regulatory regimes, Chen says. We will likely see a convergence between traditional financial infrastructure and blockchain rails, where many assets, securities, funds, collateral, are issued and managed on-chain, even if end users do not always see the underlying technology. That convergence has already begun. New advances in technology are turning what was once considered a speculative field into buildable, compliant, substantive, and robust asset class. Today, digital assets are creating tangible value beyond mere market attention. Big-name established finance institutions have already begun investigating and seriously discussing the role of digital assets in the ecosystem. One of the most significant signs of a new technology, product, service, or process going from an innovative idea to a transformative reality is when the established institutions of the sector start taking it seriously and adopting it. Digital assets have crossed that threshold. While firms like SNZ Holding have long been building the infrastructure needed for this stage of digital assets evolution, established institutional players have also begun building through the cycle. Financial institutions' interest in blockchain infrastructure, digital asset products, and on-chain use cases is no longer dependent on short-term price movements or trading volume. A few years ago, the main question was whether crypto, Bitcoin, or Ethereum were legitimate at all, or whether they were simply speculative or even fraudulent, he says. Today, the conversation has moved far beyond that. The focus is now on how to value these assets fundamentally, how their economics may evolve, and what kind of future cash flow or network value they can generate. It's becoming increasingly clear that traditional financial institutions have set aside their skepticism and are now treating digital assets as a serious asset class, which is allowing the industry to evolve and grow in new ways. Digital assets as a class are deserving of structured analysis, valuation frameworks, and strategic thinking, all things that the financial sector is providing now that the sector has been normalized. This change in mindset has also led to internal changes at these institutions. These firms and banks are setting new standards for internal discipline with firm-wide protocols, compliance frameworks, and operating policies capable of supporting future tokenized products including real-world asset use cases. Some institutions and security brokers are increasingly willing to explore how qualified DeFi users can serve as liquidity counterparties or participate in controlled, risk-assessed structures, Henry Chen adds. That suggests the market is moving toward more practical integration between traditional financial institutions and on-chain finance. Recent industry discussions and participation have revealed just how frequently real application of digital assets are taking shape. AI and blockchain applications, Web3 payments, stablecoins, agentic payments, smart hardware like IoT and robotics, science and life sciences, RWA, content use and IP. All of these are or have meaningful real-world applications of digital asset ecosystems. The shared thread through these applications is simple. They move the industry away from abstract speculation and toward real utility. The conversation is no longer only about protocols or assets in isolation, says Chen. It is increasingly about how digital infrastructure connects to everyday economic activity, enterprise workflows, and real-world business models. That shift makes the discussions more constructive and more exciting, because it points toward areas where digital assets can create tangible value rather than only market attention. Any asset needs a strong ecosystem to make an impact. Strong digital asset ecosystems are marked by their clear product-market fit and a real economic logic behind them. Crypto and digital assets share a key trait with any other emerging technology sector. They have to follow human behavior, supply and demand, and the basic principles of a sustainable business model. In Chen's experience, the most successful projects are the ones focused on solving real problems, that create genuine value, and can form a closed-loop model that becomes self-sustaining. The projects that rely on artificial incentives or token mechanics without a strong business foundation are the ones that inevitably collapse. The strongest Web3 projects tend to be the ones that combine technical innovation with strong operational discipline, Chen says. They understand both the crypto model and the realities of building for real users. That is what gives them staying power. The difference maker for many projects today is commercialization capability. It's no longer enough for an idea to be compelling or a product to be technically strong on its own. That innovation needs to be translatable into real-world adoption. The best way to filter out the meaningful opportunities from the noise is to start with a top-down view of the industry landscape. Understanding the full value chain, identifying the bottlenecks, and determining which parts of the market have the greatest economic potential are crucial for separating temporary excitement from long-term value creation. Right now, some of the most promising opportunities are coming out of Asia's digital finance space. What stands out is that the region is not only experimenting with financial use cases, but also exploring how digital infrastructure can support broader economic and creative activity, says Henry Chen. I also want to help increase awareness of Asia's role in the next phase of digital asset development, especially through the Hong Kong hub and the broader regional ecosystem. There is a huge opportunity to support future unicorn companies and the entrepreneurs building them, particularly at an early stage when support can make the biggest difference.